Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, July 25th. Michael Boutros here with you this morning. Good to be with you guys. Jaya, Jucka's in the house today. Kelly, Mark, Marco, Michael, all three Pete's, Tom, Ty. Great to see you all in the room. Dagon, I got your email. What was that about? You were asking about something earlier. Great to see you guys. So today's the last strategy webinar, at least from the intraday side. We have Jamie up in at 11 o'clock, but I'm out tomorrow. So I want to get you ready for the biggest event risk, which is going to be actually on Friday. It's not even tomorrow. It's going to be US GDP. Now, the second quarter read, the first read for the second quarter GDP is expected to come out pretty strong. So it's a scatter plot. I mean, the mean estimate is 4.2% for growth. I've seen estimates as high as 5. I've seen estimates as low as 3.5. But even a 3.5 low really puts us on mark to have one of the fastest quarter growth that we've seen in a while. So as far as the dollar index and where the dollar is trading, you know, we're still in the monthly opening range. We're still above 94.20, 94.27 support. So I just want to pad the expectation for a bit. But we have that on tap, and then we still have also obviously the ECB, which is going to be the big one for the euro mover. So definitely something that we'll talk about today. Here's your email, Dagon. You're asking about the opening range indicator that I used to have on my previous platform. We don't have one coded out here actually for TradingView. I guess it'd be relatively simple to actually code that. Dagon, I just haven't gone through the trouble of actually writing it out yet, so I don't have that for TradingView now. All right, let's jump right in. So you did get some information in overnight trade. You know, obviously Aussie CPI came out a little soft. You're looking for a 2.2 clip year on year, came in at 2.1%. That being said, the focus really shifts to the ECB and really shifts onto you know, Friday's GDP print, both for the dollar and for the euro and the crosses that we've been trading. So I went a little overboard yesterday, but there's so many different plays, setups that are in play, really clean levels. So we'll try to go through all of them today. I got the DXY, euro, sterling, Aussie. I'm not in that anymore. I'm looking for re-entry. It's probing the weekly opening range high, but and I do expect it higher, but I want to be a little bit cautious here. Euro yen, Ty, you got me interested in that yesterday. That euro yen setup, looking a little lower there. Aussie Kiwi and Aussie yen from earlier in the week were actually picture perfect plays for the rebound on the Aussie. We'll circle back to the dollar yen, dollar CAD, and Kiwi. Okay, Kiwi trade balance last night was pitiful, came in at negative 113 million. We were expecting a build or a surplus of 200 million, so that was a big miss. And we will touch on gold and oil, okay, as we head into the close of the week. I think those are making big moves as well. So that gives us a full packed menu. Don't forget, as always, again, Jamie will be on at 11 o'clock with the midweek strategy webinar, so you'll have everything you need to close out the week. Hi, Michael. Hope you're doing great. Could we have a look at NASDAQ? Roxy, sure. I don't have any charts on NASDAQ. I'll be quite honest with you, but I'm more than happy to take a look for you. No worries. Okay. Okay, we'll get through these pretty quick as far as the majors, but DXY, last night's update was packed. So look, you know, the focus that we've been talking about for weeks and weeks and weeks has been this 200-week moving average. It's the same thing heading into the close of this week. We need to maintain a weekly close below this moving average to continue favoring the possibility for the exhaustion trade in DXY. We want to close below 93.89. We've been trying to get that for a while. We've been unable to do it on a closed basis. That's a bounce if I ever seen one, right? So you're getting some consolidation. If we pop higher, the risk is basically 95.35 again, 95.30s. That 200-week moving average, which has caught, you know, pretty much all the swing highs since. Look at this. So, you know the key levels that we look for on the Friday close. We want to close below 93.89 to validate that a more significant high is in play. A close above that 200-week moving average really invalidates our opinion as far as the pullback play in the DXY. Such a scenario, 96 should be the first target on the upside. So pretty clear on the weekly charts. Daily charts, your monthly opening range is intact. You had some divergence into the highs. We like the turn. We made another stab at the highs and failed. 95.15 is now the high day close for this year. The high close, this is the high close now, not the high day close, but the high close comes in 95.30, so that same exact region. Want to see that hold as resistance. I don't really even want to see price get back up in here, guys, but that would be the bearish invalidation. Downside break of 94, obviously, you're looking for an objective monthly opening range break, and that gets you down, basically below that slope. So your objective monthly opening range lows. So the levels are clear and sharp, finely tuned here on the daily chart, right? Looking to fade rallies while below the parallel, basically. Momentum, the trigger that helped us basically confirm the reversal, has been resistance. And we just need to see this 40 break in momentum. We haven't seen it since the low, right? Momentum has held 40 on the daily charts since the low of the year. So a change in that would be a fundamental shift in the momentum profile, right? And we'd start to really confirm larger pullback in the dollar. Guys, this is all speculative here still. We did good on the dollar pullback. We ripped some pips for sure. We have to kind of remain poised, but objectively, we're still right. We're objectively just a minutely amount smaller, lower on the month. So just think about it on the whole. Intraday looks like this. DXY coiling in range bound, says Ty. Yeah, I think so. And I think the euro is providing a very, very similar picture. I'll show you that in a moment. Here's, if this pitchfork is in play, again, this is not something that's a conviction pitchfork. Caught the lows pretty nice here, but would suggest within time, if we break the weekly opening range lows, 93.90 is that target. 93.70 is the break. That'll give us, again, that larger move that we're looking for on the DXY. So intraday, all you've done is set a weekly opening range on a Monday, Tuesday stretch, and you're still in that range. So again, we have to stay as objective as possible. It's quick to get really excited once you get that initial reversal that we got last week, and then again with the pullback, things look good. This is where you want to be a little bit more cautious. We're heading into the last couple of days of the month here, so big event risk on Friday. If we get, a final dollar rally, if we get some sort of GDP bump, again, the expectation as it stands right now is somewhere in the realm of 4.2%, 4.3%. Bloomberg saying 4.3%. I know it's going to be sort of a wash. Just watch. I would still look to sort of fade dollar strength. If we get something northbound of 5, it's really difficult, to envision a scenario where you'd be ballsy enough to kind of jump in front of a dollar rally. If it rips through 95, we're kind of done with that idea. So very precarious, but all's well until something changes, right? Looking to fade dollar strength. So for the euro, so any questions on DXY or the event risk that's on tap? Pretty big stuff, guys. This is the largest GDP print that we've gotten for the U.S. economy in a while. Sort of a big deal. Now, the reason I think the upside's limited for the dollar is because the commentary that we got from Trump this week. People are running with that commentary, saying that that's going to prevent the Fed from hiking rates. I don't think it's going to prevent them from hiking rates, but it certainly will raise the bar with their ability or their willingness to hasten the pace of interest rate hikes. If that's the case, then the market's pretty much priced in what the Fed is saying, guys. And again, if we just take a quick look at the updated Fed fund futures, a quick look at what the December read says. And it's built, okay? It's built up. Wow. Okay, so it's built up basically almost 7% since the last time we looked at this. We were looking at basically 56, 57% for the next interest rate. Well, we're already pricing one in basically for September, right, guys? This is for December, so this should be the 4th hike this year, which is what the Fed is projecting. Markets are starting to fully price that in as well, right? So the question becomes, well, if you get a super strong print tomorrow, does that suggest that the Fed's going to have to sort of up it a little bit? Well, the commentary that we're getting out of the White House, probably Jerome's not going to want to press that any harder than the markets are willing to go. So I take it with a grain of salt, guys. So from a fundamental side, this is all to say, anyone who justifies sort of dollar strength because we got strong GDP, well, we're priced in for the hike basically in December now. Markets are priced in at 4.3% for the print tomorrow. So anywhere in that realm, I'd still be looking to fade dollar strength. Okay, northbound of 4%, northbound of 5%. Well, now you're talking growth that's like seriously way above expectations of what the Fed has projected. We get 2 revisions on this print, so again, it's not an end-all deal, but it's going to be exciting, and that's on Friday, guys. So dollar levels are pretty clear. So what does that mean for the majors? Well, for euro, again, we got to keep it at basic. 1606, 1603, the low day close for the year, the low close from last year's October low. We've been watching, or November low, October low, I was right. And the median line, it's all been right here. And we've been in consolidation. Ty, I think this is a much cleaner consolidation than you're looking at in DXY. Obviously, you're looking at a very similar thing, either typically the inverse chart, but even the weekly chart shows it, right? All I wanted to highlight here, guys, is just the full range of charts for, excuse me, for euro. Okay, so this is the weekly chart. Here's the daily chart. You're seeing consolidation off the June highs. So we're now within the second month's opening range, hasn't given out. You're seeing that consolidation. 1603 major support, 1750, the high day close, slope resistance. That's the range break we're looking for. Now within this range, we'll favor buying weakness or fading weakness, ultimately looking for the top side break. That said, 1602, 1605, that's our line in the sand. Euro dollar below that region, you're really running a risk of a larger correction. Here's what it looks like again on the daily chart now, no change. Intraday, this is what we looked like last night. New pitchfork added off the low here. Again, too early to work on with too much emphasis or too aggressively, but looking at it objectively, you have slope support there in magenta. That's what we're looking to stay constructive while above if this immediate advance has legs. It looks to me like it may want to make another low. If it does, guys, the 618 is 116.41. Now that would be right below the stop that we have for the euro on these swing trades, but just something to keep in mind, right? So here's what it looks like on the intraday now. Buy there for a fade. Yeah, Ty, that's kind of my idea if we get that drop. And your stop would be against the main region of support, 1603, 1615. It's a big region here. I'm not really stressing the 1615 level, but certainly 1603. If you get that final drop. And the only reason is because if this is 5 and you need 3 down, this could be it. It's not the cleanest. If it's going to be a larger sort of setback, may end up resolving here towards the end of the week. It depends how this plays out. If you get that dollar rip on GDP, if it comes out super strong, final drop into like the 618 slope support might be the play. Ultimately, the consolidation is pretty darn clear. By the way, guys, quick note: sound is good here, right? Sound and video calling, no worries. Just checking. Never have a problem in my office. It's just they gotta get their act together over there. But the consolidation is pretty clear. So it's this region that's the big sort of validator for the breakout. So, and the best part of it is it's going to be the basic high day close for the month, slope resistance, former swing highs, so just objective range highs, and a basic 786 retracement, which is held not once, but twice. So the breakout pressure here should be pretty strong if it does pop. And 1779 would just be a first initial soft target. You'd be really looking for this stretch here. And you can see on the daily chart, that's a big region of resistance. and it's also the June opening range highs, which never gave out. Okay, so that's sort of the game plan here for Euro. Dagon says he might still be having issues. Anyone else having issues? No, not here, Dagon, right? My system runs tip top, man. All good, says Pete. Mark says sound is good. Okay, buy a breakout of 11 of 116.50 or fade it. Buy a breakout of 116.50 or fade it. I'm not sure. I'm not sure I get what your question is, Ty. Can you explain that again? Buy a breakout of 116.50? So no, this is what I want to see hold as support if we break this slope here. Is this lower parallel or this 618? I'd be looking for entries here, exhaustion. Now, ideally, that would be the play into the end of the week, Ty, right? And yes, 117.50, 117.50, that would be the target on the upside for sure. And that's also where we have to break out for this to have legs, right? Look, ideally, we're in the trade already. Ideally, this holds right here and we continue higher. I'm willing to forego, I know I don't have an entry on this right now. Unfortunately for the intraday, swing is already in it, so that's set in stone. But if it breaks and takes us out of that, I still wouldn't give up hope. I'd look for a drifter towards here to try to fade, another wick into these lows. If we get the breakout, great. The open target on the swing trade is designed for this breakout, guys. So if it breaks to the upside, there's a lot of different ways that we can play it, and Jamie will walk you through that on the midweek strategy webinar 11. But for me, for entries on the intraday here, I'm looking for support here. If you get the top side break, I'm not going to chase it. It's 1750 on the swing. That's the breakout or failure that's going to really determine how this trade does. Right now, I'm working the 11,650 area. Okay, that's not a bad entry. Stop below against this low real tight. If it gets down there, kind of bail on it, look for the entry, or you can have the stop just below that swing low. 1650 is the swing low that I like trading against for this move. So that's where our stop is on the swing trade. As long as that holds, I think we're good, guys. It all depends, again, weekly objective stuff. Take a step back. When you get kind of emotional and when we get in the trade and now we're kind of pressing our emotions, take a step back. Here's your Sunday open. You stretch a high, you stretch a low. You're right back in the range. There's not an opening range break yet. There is a consolidation coil. If it breaks, we're well positioned for the directional break that we favor. If it doesn't, well, the stop is pretty minimal here, right? 30 pip stop, no big deal. So that's the way you want to play it, guys, and try to be as objective as possible. Again, I'm just giving you the warning because if people are talking up this print so much, if you get some sort of blowout read on Friday, yeah, if the dollar just knee jerks higher, you got to know the levels, and the levels are 1640, 1615 on a slam lower. That's our threshold. We do not want to see it go lower than that. It'll fundamentally change our picture here on the trade if we get below 116. So may the force be with you. Let's see if we can get this going to the upside. But the slope looks pretty decent. The slope looks pretty decent. Here's a parallel. Here's a parallel, right? So I'll be working with this and see how this performs into Friday. I believe there's going to be a Draghi surprise, says Ty. Based on what, Ty? Let me ask you that. I don't mean to pick on you. But I was talking, I've been kind of probing the fundy guys on some of the desks here in the city because, the ECB is always such a big deal. All right, so there's really no smoke signal, says Ty. Yeah, but we kind of know, right? The bigger picture, Ty. We know when they're going to be tailing off the support. We kind of already have a time frame of that into 2019, yada yada yada. I think it's going to be steady as she goes, to be honest with you. If there's some new announcement, whether it's, so obviously the elephant in the room is if he starts talking, oh, well, tariffs may do this, or, oh, the trade wars are stoking this. If these kind of concerns filter down to the central bank and those kind of come out in the statement, yeah, you might get some gyrations in price. But Are we expecting a fundamental shift in the outlook for monetary policy from the ECB? I don't think so. You know, I don't think so. They're in no rush to kind of tighten things up. So we'll see how it goes. We'll see how it goes. Objective, right? This is it. This is it. I mean, it's been pretty clear on this consolidation break. It's really kind of make or break here into the close of the month. Right? There's so much to look at. All right, we got to move on. Spent a lot of time on DXY and Euro. That's 1 and 2. So really quick, 3. Here's sterling. Sterling on the weekly chart looks like this. Same picture, different day. Weekly chart has highlighted this major key long-term slope support that we've been following off the yearly highs. Really, really close. Swing lows from back here, 130.27. The 618 key retracement of the broader advance from 2016, 128.77 on the weekly charts. These are the key levels to look for. Last week, we dipped right into that slope, 30.27. Rebounded higher. Our base case scenario is that we're going to see a little bit more of a rebound before, let me take a step back. If we're going to rebound in sterling, this would be where you'd want to see it. Now, it's like trying to catch a falling knife on this, so I've been very slow to operate. Again, as a disclaimer, I haven't taken anything, although we've been pretty spot on with the reversal. Here's what the daily chart looks like, and here's what it looks like, or here's what it looked like last night. So yet a fourth, and this is another example for anyone who's kind of getting their feet wet with RSI and the like. Another example of how price can continue to show divergence continually into the low, but you want to be mindful of this. So this is 1, 2, 3, 4 reference points of a lower low on a close, a lower low on a close, lower low on a close. A fourth reference point of divergence. Every single one of those reference points came along the median line or the lower parallel. Really nice area, right? And this is kind of make or break it, guys. What do you have here? Well, you have the 50% retracement of the entire advance from 2016. You have former slope support from 2017, support, 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 break, should be resistance. And you have objective monthly open resistance at 131.80. Excuse me, 131.90. It's open 131.80. I'm right. So we're right there now, right? 131.60, 131.80. That's resistance for sterling. If we're gonna break out, this is kind of the level you want to see pop like a cork, right? To get us that upside play. Another reason why Dagon, he's writing that ahead of my speech. Yeah, he says that's the monthly open as well. You're absolutely right. Sorry about that. So yeah, we are at resistance, right? So if we're gonna breach here, you'd be looking for an objective rally first towards, this is the 38.2 line of this range, guys, right? That comes in right around like 32.30s. That'd be sort of your first target, but if that does materialize, if we cork back above this slope, I would suggest that would be a pivot in price. That would be the first target, but I do think you would get a larger rally in sterling. Again, very headline event driven. It seems like Theresa May, whatever, based on the, I guess, based on the news articles that you're reading, is sort of starting to get her hands around a little bit, or starting to get her hands better around the Brexit debacle. So take what from it what you may. At this point, sterling's at resistance. I'm looking for a weekly close above 31.64 to really validate that a more important low is in place. Guys, we've been here before. We thought that was going to happen here. We thought that was going to happen here. We thought that was going to happen here. They all failed, right? But that's not to say that we should completely give up, right? That's just to mean that we need to be mindful of this is the first major hurdle. We nailed the reversal. This is the first major hurdle. Kind of pull back your expectations. Similarly here, momentum has been unable to mount even 50 since the breakdown from the yearly high. So just an objective daily close above 50 even in momentum with price back above the monthly open would suggest, okay, it's alleviating some of the downside pressure. Intraday, it looks like this. And here's what the intraday chart looked like yesterday. Objective weekly opening range taking shape just below resistance. Again, 3164 to 3180 monthly open. Here we are. Again, if you're holding long positions, this is where you do want to take a little off the table, get defensive on your stop. 32 is a basic 618 of the decline, real near-term stuff. If that pops, you'd look for a rally towards those swing highs from last week, 3290, the upper parallel. Just be swing targets to go for on the stretch, but caution here. This is a little bit loaded up here in this whole region to 32. So not an area I want to be looking to stack up new longs. As far as even a short position, guys, I don't even want to play it on Sterling. Even if we're at resistance, this is not the one I'd kind of want to play. There is an opportunity here if you see failure at 70 and then a break of this momentum trigger to try to play a spike high, a short against that high for the pullback. In that case, just tack on a quick retracement. This is null and void, by the way, because we just made a new high. But if we were to do that and we were to fail here and pull back, there might be a short opportunity just to play a near-term scalp, but I'm really interested to see whether this can materialize into something, guys. Sterling's been really beaten down. What time frame are you looking at, Dagon? Says possible divergence coming up. So this is divergence as we speak now, actually, as of this candle even. You know, bring it into a line chart, makes it easier. So this candle already pegged right here to higher high and a slightly lower high in price. So I see what you're talking about, but yeah, it's resistance, right? So this is kind of where you want to be looking for possibility for near-term exhaustion. If we clear that slope, you know, I think that's it. We're kind of validating a large return in Sterling, but until we do, might be kind of aggressive. So that's British pound. Look for validation. You want to see some 32 a breach. If the setback gets going, you know, don't want to see it get back below 3060 again. That's kind of my line in the sand. That's the objective weekly opening range low. Below that, you're starting to challenge again the monthly lows or the monthly opening range low rather, and there's no benefit in trying to fight that at that point. But Sterling. That's number 3. Number 4, Aussie. Aussie, my dear Aussie. This thing has been pretty clean. Again, I'm still looking for re-entry. I told you that last night. This was a great opportunity to try to fade the drop that you got on CPI. Here's Aussie. I don't know if you guys want to go over this again on the weekly charts. You kind of seen this one pretty close up and personal for the last couple of weeks. Really clean support bounce, 73.27. That's the major key support. Just want to highlight into the close of the week, 74.80 still our line in the sand. Former swing lows, 50% retrace. You know, that's going to be the range highs that we want to clear on a weekly close to get the reversal play. Aussie on the daily chart looks like this, right? We're still clean within the monthly opening range, which takes place right above key support. Low day close is 73.36. 73.27 is that key level we've been talking about anyway. Here's the intraday chart. And here's what we looked like yesterday. Okay, so you know, as I said, basically we were at resistance right ahead of the CPI print. So CPI again came in a little bit softer than expected. We were looking for 2.2, came in at 2.1% year on year for the second quarter. So you know, you saw the spike, failure, no surprise. Weekly opening range high held, and here's the pullback. I thought this was going to give us an opportunity to try to get a deeper play, and the new 50. Got 73.84 as sort of a level I was looking for to try to see if we can get back in there this morning. Here's the rebound higher. So, you know, no play for me here yet. What can I say? It's just another consolidation, guys. It's just another major dollar consolidation. So I still favor the upside. Everything looks clean on it. It's just, you know, from here with this failure and this right here blow off, wouldn't be surprised if tomorrow's, you know, or Friday's GDP number kind of screeches this back into slope support, maybe even completes a 618 retracement, then you're back on your merry way. So caution to close the week. Caution to close the month actually, but all is well, I think, with Aussie. We just kind of need to time the entries again for another long position. Any questions on Aussie? No change to any of the levels. The only thing you want to take into account is just the new high. So this retracement that we were working with, take that retracement to the new high that we just made last night. Any questions on Aussie? Guys, I see a couple of new names in the room. Welcome aboard. Just a quick reminder that you can take a snapshot of any of the charts that you see presented here. There's a camera button on the GoToWebinar screen. So if you want to take a snapshot and refer to any of these charts or kind of do your own studies on them later, feel free to do so. Okay, hunting for Aussie long entries. I want to see this upside hold. Can you make a fib adjustment and let us take a picture? Ty, is that centered for you? Is there something specifically you want me to do with this? Okay. So that is Aussie. Yes, that is the adjusted. That's the adjusted fib right now. So feel free, Ty. So that's the last dollar setup from last night. Euro yen, Ty. This was because of you, man. You got me all into this thing. I couldn't stop staring at it after the webinar yesterday. It's very provocative where we are. Is that a little enticing? Kind of luring you in with my language here, but where we are is very interesting to me. Now, you guys know where we stand on the dollar yen. The abominations kind of fell out of focus for me this week. It was all about dollar yen last week. It was really nice turn. We kind of lost some steam on the way down. I still think it does go lower with the event risk on tap into the end of the week. I don't even want to mess with it, so I kind of lost focus with it now. But listen, for euro weakness, for a downside play in the euro. So we want to see euro hold support, right? But let's say the euro doesn't. The downside play I think is most favored here in euro yen. And the focus for me is on a drop towards sort of 29.17s, maybe 29.30s. Jamie's looking a little deeper towards 29.20, 29 flat. And the reason is pretty clear. Here's your weekly chart on euro yen. All of these red lines are derived from the basic slope support that you made from the low here in 2016 and 2017. A parallel extending off these highs, caught resistance, accelerated breach, messy support a little bit, but resistance. We came right back into it as resistance yet again. Turn lower gives you a 38.2 is 129.17. 200 week long moving average is just lower. Former trendline resistance converges on both of those right here. So the 29 handle does signify, even as deep as 28.83, where that moving average is, does signify sort of a big region of support for this pullback play. That'd be sort of your first area you'd look to pause on the pullback. That's sort of the determinant factor. If we're going to head higher, that needs to hold, and you'd look for the rejection and sort of the rally higher. If that breaks down, well, that's former channel resistance, then you're on your merry way lower. But the pivot, you'd think would be somewhere in this region. So that's the weekly chart, really broad view from 1,000 feet up. Euro yen on the daily chart looks like this. So former slope, okay. This is the pitchfork that we've been working with all throughout the advanced. Really nice turn off the highs, resistance. Look where we capped out. Objective 200-day moving average, catching the highs. Here's the pullback. That also ended up being, okay, the 50 line for the current operative ascending formation. Caught that confluence. There's the pullback. This was support. The 100-day moving average and the 50 line, which caught support here on a closed basis. Last week we closed, or yesterday rather, excuse me, this is a daily chart. You closed below. So the risk I still think is weighted to the downside below this region. We want to see sort of the drop here. Mind you, this is also the monthly open. So real objective stuff, guys. The 38.2 retracement of the range, the monthly open, slope support for the pitchfork, and also just basic objective trend line support all converge right there. So maybe it's asking for too much kind of to get a drop right into that region, but that's sort of your pivot range where you want to see a strong reaction in price. Here's what it looks like on the intraday. Okay. Now, just within the confines of this near-term decline, looks pretty channel-y to me. You know what I mean? And we kind of highlighted this last night. Here's euro yen. You know, you're looking to stay bearish, essentially below the upper parallel for now. Want to see a drop in this 29.50 region, 29.17. You know what I mean? Would sort of be nice exhaustion regions to look for a possible rebound, a possible recoil back higher in euro yen. Now, if we breach this, bearish invalidation is 130.60. So you know what to do in the event of a breach. So that's the objective weekly open. It's former slope support, turn resistance. If we breach above that, you know, you're still within the broader uptrend. So don't fight it. At that point, I would look a little bit more of a play to the upside. You're absolutely right, Dagon. You're starting to spot divergence really well. The divergent play was evident yesterday, and I kind of highlighted that in the report, in that you were getting that divergence, so you could see a little bit of a pop higher, and it's exactly what you got. There's been no divergence since yesterday, right? The divergence signal was here and here with these two lows. Since here, we haven't registered a new lower close, Dagon, right? So my point being is that divergence signal has played out already. Okay, if you're looking at this on a 2-hour chart and you get this kind of divergence, so this divergence into this low, the rebound from 129.83 into 130.20, that 50 pip rally, that's, you know, the play in my mind is played out for that divergence signal. Now, if we were to make another low here and you were to get a third divergent reference point, that's even more fuel in the fire that you may see exhaustion at one of these two levels, right? But don't base anything on the fact that you had these two divergent points. That has kind of played out already. Does that make sense? He says, got you. So little subtleties, right, Dagon, but tweaks that I think sometimes help. Awesome. Awesome. Okay. Let me look at this at a closer time frame, actually. Ooh, close. Okay. Nothing yet. So I see it pretty on a closer time frame, pretty range bound right now. That slope comes in now at 31.13. Basically those range highs made from yesterday. Okay. That is euro yen. Number 5. Number 6 will be Aussie Kiwi. Another picture perfect play this week. You know, Aussie Key, the whole premise, and we talked about this at length in the webinar, is that this thing was coiling up right below the upper median line parallel. On whole, the red lines highlight that this thing is just in a basic triangle or wedge consolidation pattern, whatever you want to call it. Series of lower highs, excuse me, a series of higher lows. And there was a, you know, a nice little recoil there, potential breakout to the upside. So I am looking higher in Aussie Key. It looks like this, pulled back in overnight, but don't think that we've invalidated anything just yet. Okay, there's the breach. You went as high as 109.36, 109.35. You know, I still think targets are right on play. Here's the pullback. So while above former slope support, that's exactly what we were looking at. If we were going to see this thing hold, that's where we want to see hold support. Former slope resistance as support. Obviously got a little messy in pro below, but here's the rebound. If this thing has legs, this low should hold now. So if this thing breaks back below this, you're likely going to see a little drop down towards 108.34. Just remember, for the last 2.5 weeks, we've been talking about the 108.66 bounce. That's sort of been the upside play that we've taken every time we've approached it, and it's worked out pretty well. So that is now the level of which, if you break, you also should see acceleration. So I don't, you know, I missed obviously that trade as well in the breakout. But let's trade another day. I think it'll give us something. Look for a consolidation break for this wedge pattern. Whoops. Aussie Key questions, comments, concerns. That's number 6. Number 7 is Aussie yen. Also another one that played out really well this week. The support bounce that we were looking for early in the week was right on point at 81.88. So here's what it looked like last night. We were saying, look, you're likely to get some kickback from here. 82.69 was the objective weekly open. You have 38.2 at 82.62. So for a region of which, if you're holding longs, good place to get out. If you're looking for exhaustion play or near-term scalp on the short side, a decent area. Now you got a spike, okay, into 82.66, and that was a perfect hold. That's the 50% retrace. Just below that is the objective weekly opening range highs. So you basically spiked into this, failed, and here's the pullback. Where do you play it from here? I don't really have a strong opinion, to be honest with you. The play for me last night was to try to fade this. Obviously, the play earlier in the week, as we were coming into that key support level, was to look for support there. We got support there. The rebound came into initial targets on the way up. Here's resistance, and now here's the pullback. Now you have an objective weekly opening range. It's Wednesday, right? You look for a break of this range to give you a Thursday, Friday high, period. End of conversation. Now, CPI couldn't offer the top side thrust you needed to get back through this. So I do think the risk is for one more low. This is a 1, 2, 3, 4, 5 wave count. 1, A, B, C. Look for one more low before this thing starts to resume again. So I kind of think you try to tempt it. Wouldn't play the short side, but if we get a drop here, I try to tempt another fade against this low to play the upside in Aussie yen. But that's just from my near-term approach. I really, guys, from here, intraday or on a broader level, here's the daily charts to put things in perspective for Aussie yen, right? This is my concern in trying to play the short side. This was, if this is resumption, the top side breach here should see a new high. I just think that you could see one more low before this thing washes out and kind of resumes higher. Aussie yen on the weekly chart looks like this. It's a pretty big support zone. So if anything, I kind of rather play pullbacks to buy than try to play the short side from here. But from here on an intraday basis, I do think the risk is for one more low. Questions on Aussie yen? All right, that is number 7. Number 8, dollar yen. Let's hit dollar yen real quick. So here's my issue with the abomination as of late. We've been following this one like a hawk all throughout last week. Kind of lost focus because look what the opening range for the week did. We highlighted this on the Sunday update. Now I didn't really kind of know what to do. The downside targets were all taken out. 1162 is kind of our line in the sand. We had slope support here. So if this thing was going to hold, or if this break was legit, let's say, we would have wanted to see 1162 hold as resistance and kind of a slam lower. You got the drift lower into the downside targets, but the rebound has been kind of pitiful, right? So you got 1115, 110.88, 110.84 was the November low, the 618. You found support there. On the rally, we were saying look for possible entries at one of these two levels. A basic 38.2 of the range, former slope support, gave you 111.60 again, 111.67. We didn't quite get up there. So for me, that would have been an entry, or at least a level to look for exhaustion and momentum and exhaustion and price. But you never got out there. So it never really caught my attention this week. On whole, here's your weekly opening range high. In my view, here's your weekly opening range high, right? We made a drop, we tested the weekly opening range high, and we're still in it. So in my view, this is just a pretty objective weekly opening range right above support. Okay, if we get the downside break, I'll kind of be pissed because I didn't get entry. I really wanted to see a thing drop into 11 or rally into 1160 again. Look at this here, guys. Let me take a step back. Here's 1160. It's such a beautiful spot, and it's just a basic objective region where we've seen pivot in price, right? Former swing lows, break, former swing highs, breach, acceleration, failure, acceleration, acceleration. So in and of itself, here's dollar yen on the weekly chart, 1160, 50% retrace. Again, former swing lows, former swing highs. You know what I mean? It's such a sweet spot. So in and of itself, if we were to get a rally here early in the week, it would have been a great spot to kind of short. I'm just crying over spilt milk here, guys. All right, I didn't get the entry, period. Here's the move back. It's an objective weekly opening range. If it breaks, look for 1035, look for 110, 109.90, sort of where I'd look to clean that up. You have also the 200-day moving average down there. You have some slope support. All right. You do have some ancillary yen data, but nothing that should be earth-shattering here over the next to close the week. Questions, comments, concerns on dollar yen? And again, get Jamie's opinion on this. He'll be on 11. I'm sure he may have a stronger opinion than I do on this, but base case scenario for me is we need to settle well below this region to really validate a larger reversal in price. The monthly open is pretty objective right down here. It's number 8, number 9, dollar CAD. All right, so this is what we look like at the early stage of the week. We were saying that 31 was support, and that was the level of major key contention for dollar CAD. It's another one of those trades, which is like, you ever see that movie Swingers? Kind of just hanging around, it's kind of not doing much here. Look, it's a definitive push below 31 this week or not. That's all I want to know. Really nice spot where we reversed. We made an outside weekly reversal off resistance, off slope, off a 50% retrace. Couldn't get cleaner. It just fell dead on its face on 31. Former swing high, opening range highs for the year, 618 retracement, 100% extension off the lows, beautiful confluence of Fibonacci levels. We've just been sitting there for 4 weeks now. So look for a make or break move here this week. Dollar CAD. Daily. Okay, we've been working with this embedded slope. Looks like we made a run through the median line, failed, and here's the reversal again that we made last week. Here's the start of the week. You get a little bounce higher. Looks good for a break lower. This is the line in the sand. 30.46 former swing highs and the operative 618 line of this slope, which on a closed basis has held support, held support, held support, and now converges on those former swing highs. Okay, now if we get a push below 30.46, what is that, guys? What is that? It's an objective break of the monthly opening range. And that would be anyone's opinion out the window. Objectively, that would be a downside bias to close the month, targeting first the 100-day moving average and then slope support. You got a convergence down there, just lower, near like 29.28. Moving average comes in at 29.56. So sort of these would be your focuses if we're able to make it below this low. Objective stuff, right? Monthly opening range. So I think the levels are pretty clean as far as dollar CAD is concerned. It's just that on the near-term approach, guys, feel free to take a snapshot of this, updated levels. On the near-term approach, the problem is how do you attack it if you're not already in it, right? And here's what the updated intraday chart looks like. Right? So we opened up the week saying, here's that support zone, right? Watch out. We could see a rebound here early in the week. If you had the foresight, this was actually a really great entry, really tight against that stop. You literally would have had like a 20 pip stop, not even, to play a really decent rebound. We were looking for re-entries at 32, and this is what we talked about earlier in the week when we started to push higher yesterday. A 50% retrace, really clean. You have that 50 line for the current slope here that we added on. So if this has any merits, be a nice spot. Just like dollar yen, it failed right ahead of it. And this is sometimes what happens, guys, if you're not watching price too closely. Um, you look for the ideal entry on the advance, the ideal entry on the pullback. Sometimes you'll miss opportunities there, and that's okay. It'll happen. The market will always provide another opportunity. Again, I'm just crying over spilt milk because we had so many setups this week, and I feel like I missed more than I should have. But look, the turn lower, here it is. This is a break of the objective weekly opening range low. So as it stands right now, you're looking for a Thursday, Friday low in price. So don't go chasing, but 3067, again, those former swing lows, that's, these are objective stuff. This would be a break of the monthly opening range. That would drive things even lower into the close of the month. So I do like dollar CAD lower. There's no CAD data of note, at least that I can see into the end of the week, that should really shift your attention away from the fact that this is going to be a pretty big dollar play on Friday. Just on account of the data. Don't forget, on Friday we also get the quarterly PCE numbers, the personal consumption expenditure, the Fed's preferred gauge of inflation, way more than CPI, right? So that print is also expected to come in at 2.2%. Now that's a lower clip than the 2.3% we got previous quarter, but this is all transitory, and this is what the Fed has already relayed as an expectation, that we may see sort of the inflationary picture soften, and that's why the door is held open on whether we get that fourth hike or not. That all being said, we keep our focus on price as it stands right now. Below 3130 as resistance. That's also the objective weekly open. 618, median line, objectively below that. You're looking for the drive lower in dollar CAD. This is null and void. This retracement is null and void. We've broken the low. Keep your eyes on slope. All right. Questions on Loonie? Since we're on the birds, let's go to Kiwi dollar. This will be number 10. Okay. And Kiwi's making a break of the high. So, look. Here's Kiwi early in the week. This is the pitchfork we've been working with. Nice call last week in the fact that we were looking for a drop into this major sort of key support barrier, 67.07 to 67.15. We were looking to validate a near-term low there. It's exactly what we got. The following day or the following days did see a massive rally in Kiwi. We opened up the week saying we're opening at resistance. Aussie was doing the same thing. You had slope resistance just higher, the median line, and you were looking for the pullback in Kiwi, but you're constructive above 67.53. Why? Interesting confluence, guys. An exact 618 retracement of this stretch turned out to be the exact 618 retracement of this stretch and slope support. So for me, this was kind of a no-brainer play. You want to be buying weakness while above 67.50 is basically the play. And obviously 68.20, that's the breach you need to see to validate a breakout, right? You have a descending channel. You have that 618 extension. This is not a retracement. This is an extension from the advance off the low. So that was your first target. You could see the kickback here. If we break through, objectively, you're looking for 68.50. More importantly, 68.74, 68.84. This is a big region of resistance. So again, the weekly chart of Kiwi just showing you coming off of support here. So you still have a lot of room as far as the broader range that we've been in. Kiwi dollar on the daily chart looks like this. Okay, objective weekly monthly opening range is in play. 2017 low day close. It's been a pretty decent pivot in price. Break, acceleration, caught a low. Break, acceleration. It's been resistance. We're making another attempt today. Watch the close. We also have a support resistance trigger in play on the daily chart. So today could be big. Today could be the breakout. Also look at this for within the lens of a basic and objective near-term consolidation. Could be the play where, again, if today materializes with the breach in momentum and price is able to close above this, that would be a validation or a trigger break on the daily chart, right? So things are starting to clear up, I think, for Kiwi near term. I would caution you though, because again, the major event risk in the dollar that's coming up. Here's what it looks like on the intraday chart. We're trying to break through the highs right now. It would not be a time of which you want to buy. Definitely not here. We haven't broken the objective weekly opening range highs, right? That stretches just a bit higher, and that converges on slope basically here. Should probably shift that focus here into 68.20, 68.25. So this is the breach that you'd want to see acceleration, 68.50, and then on to 68.74, 68.84. But all as it stands right now, it's just testing resistance, not a time of which you want to start to get long. Some of you might look at this chart and say, well, hey, Mike, is this opportunity to actually short it for a near-term scalp on the downside? I'd argue that you could play that, but we'd need to see something more convincing in price. Okay, so here's some divergence. Price action making a higher high on the 10-minute chart. The oscillator making a lower high. You see that a perfect rebound right there, right around 40 or thereabouts. And the momentum oscillator, again, keeps the broader upside on the momentum play. This would be actually a decent scalp, okay? Wouldn't necessarily jump into it here. Watch the US Open in just a couple of minutes here. But if we were to push and fail, the stop would have to be obviously 68.25 objective weekly opening range stop. Keep it tight, okay? On a scalp for a trade like that, kind of something real near term for the guys who are looking at this would be kind of a move just into basic slope support. If you get that whipsaw play, right, based on where the high registers, that's how I attack it on. Look for a 618 or a 38.2 tag for the pullback. But that's how I look to play this. The pressure, the emphasis, our broader focus is for a possibility for an upside breach to get you a little bit more of a rally here in Kiwi. But the immediate threat heading into the US trade session, in my humble opinion, again, is for a pullback. You are at resistance. Make sense? Questions on Kiwi? Okay, those are all the majors. We went through them one by one. I do want to hit gold and oil. Roxy, I'll take a look at NASDAQ for you real quick. We're running to the end of the session here, but gold and oil both at pretty big levels. Look, so here's gold on the weekly charts. Levels haven't changed. You need a 1245 breach to dispel any further downside pressure. At this point, you're coming off of slope support, but downtrend resistance is just higher. And again, 1245 is going to be the line in the sand to really validate that a more important low is in play. So until that happens, you're oscillating within a broader downtrend. Here's what it looks like here, which shifted our focus higher after we approached that 618 retracement and saw the reaction that we did. Here's a 618 retracement, former swing lows from back in May of last year. Didn't quite get the lower parallel touch, but there's the breach, or there's the rebound rather, big old reversal day right after. Still think you can get a little bit move higher, but again, 1240, 1245 is still the line in the sand. So could we move higher in gold? Yes. Is the near-term momentum picture changing on the daily chart? We're looking at it. We're looking at it. You had divergence into the low. Price action made a new low on the daily chart. The oscillator made a higher low. Now both reference points are below 30, so this is considered a weak divergent signal, but there's an upcoming resistance trigger as well. If we get above 1240, 1245, breach above here, that would be the reversal signal in gold. Near term, here's what it looks like. I think we threw this together last in the webinar yesterday. I'm not remembering, but levels look actually pretty decent. There's a stretch lower, a modified pitchfork off the lows. Caution. Constructive, intra week above 1225. Okay, basic 38.2 of the advance. Slope support. Topside breach, again 1240 and 1245 are the levels to look for. By the way, let me just see what this looks like. It's all the way up there. All right. Yeah, just keep that as a reference level as well, 1241. I mean, it's just littering this range, but it's I can't I sort of don't want to ignore it. So you have like a sort of SOS ping 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 area, which all of these are pretty important on the upside for gold to mount any type of progress. We need to get through this whole region. But 1225 is sort of line in the sand. I think you can remain constructive above this. Your weekly objective opening range high actually is going to be the decent level as a pivot near term. So here's your weekly opening range high. Probably drop that to right here. Immediate resistance 1234. Crude. I don't know what to do with this. Also, a consolidation. I think this thing rips and kind of rips higher before it moves lower, but the risk is still for the drop near 67, 66. We talked about this earlier. The consolidation break near term should give you an indication. The broader risk is below 71.20, is to the downside, in my humble opinion. Ultimately, I'd be looking to buy one of these touches again. But the near-term picture doesn't look so clear, okay? Because the descending channel formation, if this was a legit break, we want to see acceleration. This sort of meandering outside of a slope is nothing we want to see. Doesn't give us conviction, right? But same levels are continue to highlight on the lateral level. So the 100-day moving average, the 2010 swing low, 67.14, 67.40, that's what caught the lows. That remains support. That's on slope. Former swing lows from here has been resistance. Not really working with this as a rigid level, but it probably has a little bit more upside to go, and that makes sense, guys, with the dollar pullback, right? If the dollar pulls back as expected, then it makes sense that we could see a little bit of a relief here, right, in crude prices. Not surprising, but sort of lost a little interest. The major play was the pullback into these targets. Once we start to fade here, guys, kind of let this thing pan out. I think you fade strength sub 71.21 still. That's everything that's on my list. Whew, got through it all, 11 and 12. Roxy, guys, let me know if there's anything that I missed or any setups that you want to follow. Roxy, let me take a look at NASDAQ. I haven't, again, I don't really follow um, this as closely. Let's see what this thing looks like. Well, for reference, let me do this real quick, Roxy. For reference, here's the SPX. And Jamie has some interesting tidbits on this as well. This is what I've been following on the SPX just to keep things in perspective, okay? And from that level, what I did want to say is funny because I had 328.22 out here a while ago. Here's that 100% extension from the advance off the yearly lows. So boom, boom, boom. We scratched it yesterday and pulled back to close below. The risk, in my humble opinion, from a slope standpoint or from a momentum standpoint, rather, is still skewed for an exhaustion. We've been I don't want to say marking divergence, but certainly it's not a super constructive momentum indicator. But we've continued just kind of to march higher. But the risk for exhaustion is definitely still there in this region. Definitely a big level. So just want to highlight that I wouldn't be surprised to see broader risk start turning over a little bit over the next few days. Here's NASDAQ. Let's see if we have anything similar on slope. Let me know if there's anything specifically that you're looking for here, Roxy. I'm just going to kind of go on autopilot here and dress this chart for you. Okay, so nice target there. Outside day reversal off that and the pullback. All right. Okay, much stronger divergence signal here in price action, right? Higher high, higher high, higher high, higher high. You do see a failure to register any new extreme in momentum. So this one, at least from a daily standpoint, the momentum readiness, as it were, is starting to look kind of tired as well. Hmm, that is quite interesting. I was wondering where we could hit a top before reversal. So Roxy, it's a dangerous mentality. I'm just gonna say that between me and you. It's a dangerous mentality. It's good to see resistance. Let me take that back. It's good to be looking for where markets are vulnerable. But trying to fight this, I would really caution you. This is where I would start just looking objectively based on slope. This is just my humble opinion, Roxy. I don't quite think you get there, just based on the momentum profile here. But that's where you'd start to look for sort of exhaustion, 75.35. So that's another 100 plus on points higher, which is kind of big here for Nazi. Let's drill down, shall we? Let me just take a closer look here for you real quick. So all three of these reference points are divergence. Higher high in price, lower high in the oscillator. High in price, lower high in the oscillator. Higher high in price, not a lower high, but it's an equal high, right? You're not expressing an extreme in price. Yeah, it's pretty equal. So yeah, you could continue kind of push that and push a little higher, but I would be looking for exhaustion pretty nearby. Pretty nearby. Hmm. Yeah, not an asset I typically intraday trade, Roxy, but for what it's worth, um, 74.84, 75.35, 35 to 75.34, this region here. Um, it looks vulnerable for a near term sort of pullback off that region. Does that help? Offer some color to this? Always down for a test. Oops. So there is a decent slope that's in play here, just on the near-term chart, and look where the momentum resistance, or look where the trend line resistance comes into play here. It doesn't, same exact level you're looking at. So the median line has been pretty decent. The only reason I highlight this is because of how effective the median line has been. Support, support, resistance, breach, acceleration, support, support, support. And we kind of been sitting there riding it, but the upper parallel, right, still converges on that. So don't fight it. It's an uptrend straight up, Roxy, but I do think levels to which of which you want to be looking to book profits on longs and possibly look for exhaustion. Although again, a very touch and go move, touch and go type of play. Roxy says, thank you so much, Michael. You're more than welcome. Guys, thanks for everyone who attended, and thanks for sticking it out. I'm 10 minutes over on time today, so I got to run. Jamie will be up at 11 o'clock with the midweek strategy webinar. Again, a quick reminder, no webinar tomorrow, guys. I will see you on Monday morning for the free session on Daily FX, and then right back here on SB Tuesday, Wednesday, and Thursday of next week. Watch Friday's GDP print. I'll try to keep you updated as much as I can. I will be flying out early Friday morning, so the GDP print is at 8:30 Eastern. Remember, 4.2 is the expectation. Take it for what it's worth. Reduce leverage or any position that you have on dollar exposure ahead of that release. It might be a complete dump, guys. If we get right at 4.2 or at expectation, nothing might happen. But with all the hype, with all this expectation of 5% growth and whatnot, could be a decent player. Best of luck trading. I will see you on Monday. Cheers.